All right, so what about on the expense side of things? If an expense form is going to look very similar, if I hit the plus button up top, the new button, let's look at an expense form by comparison. Closing this one up, and let's say this one is going to just generic vendor one. So it's an expense form. But it's gonna look a lot like a check form, right? It's gonna decrease the checking account. It's gonna we'll make it on the same date. Let's make it 1 day later. Payment method, expense, cash. So now we have an added field because the check form is assuming that we wrote a physical check. But here we have the different transaction types that it could be, which is really not going to affect the recording, but might give us another data input field. And we might have to add one and say this is electronic or something like that transaction because we're paying it electronically, let's say. And then we could have a reference number if we have one. And then once again, we've got the categories and the items. Let's do an item this time just for comparison's sake. If I have an item, that's one time where, or one of the times where, even if I'm using an expense form and electronic transfers, I might still have to actually physically enter the transaction when I order the inventory item if I'm using a perpetual inventory system, because I'm going to have to track the item that I'm purchasing not only in dollars but in units, which the bank, of course, can't really do that automatically, right? The bank doesn't know how many units of item you purchased. So let's just call this item 1, generic item 1 again. We're going to copy that. And then it's going to, actually I need to create it. Generic item 1. It's going to be an inventory item. So we'll say that quantity on hand is 0. And we'll say as of here, reorder point at 0. Let's say it's going to go to the inventory account. And we're going to say it's going to be description item 1. We're going to say that we sell them for, let's say, 150 this time. And let's say sales tax is applicable. We're going to buy them for, let's say, 75. So we're going to buy them for 75. What are we doing now? We're buying them. We're buying the inventory for $75 each. Let's save it. And let's say we buy 3 of them now just for quantity's sake. So that comes out to $225 that we're going to be spending. So what's this going to do when we buy it now? Let me just show you on a form over here. It's same. Now we have an expense form. So this is an expense form. And we're buying inventory. I'm going to delete this one. What's this one going to do? It's going to say, well, the checking account is still going to go down. And this was for, how much was it? For $225. So negative 225. But the other side is going to go into inventory, an asset account instead of an expense account. So now we've got inventory going up and we've got cash going down. Hopefully I did that right. Right, so inventory goes up, cash goes down. Now this inventory, I need not just the dollar amount here, but also the subledger of the units of inventory. Let's check that out. So if I go back on over here, I'm going to say, all right, we're going to post it, save and close it. Let's go to the balance sheet and we'll say run it to refresh it. Let's go into that checking account for 2025. Boom. There's our check form. Where's the inventory one? There it is. I refreshed it for some reason. So there's the check and there's the expense. They're both decreases. So they're doing, in essence, the same thing. If I go into it, there's our expense form. Closing that out. Let's go back. And now we're going to go into the other side, which isn't on the income statement because we had to do an accrual thing, buying inventory. So let's go into that inventory. Ba-boom. And so now we have the inventory item that we purchased. Inventory value. Let's go. So there it is. So there's the 225. So it increased here. All right, let's go back up top and just look at the subledger just to get an idea of the subledger. We'll talk more about inventory later, but for that, I'm going to go to the reports on the left-hand side, type in inventory valuation summary, look up that one, let's do it. I'm just going to go as of the end of the year, 12/31/25, run it to refresh it. And you can see now we have the 3 units of the items of inventory, giving us the number or units of inventory and the values at the 8/21/25, which should tie out to what's on our balance sheet, 8/21/25. Okay, so if I go back to the first tab and I go back to my transactions, how does that fit in the bank feeds? Well, if I had to still physically enter the transaction myself because I was buying inventory and therefore I wanted to track the units of inventory, then like the check form, this information would pull in from the bank feeds and I would simply match it to the check I already wrote or expense form I already wrote, and it wouldn't record anything new but help us with the bank reconciliation, which is still important for us to do. But what if I had this one, like if I'm paying the rental company and this one I'm just going to pay basically with the bank feeds.